Hi everyone, welcome back. Today I will be talking about the trading plan. Every business needs a plan. If you want to become a forex trader who can earn consistently, we need a plan. I will show you how to develop a trading plan together with you all. So here are the points to prepare a trading plan, and this should be your very own trading plan. So first of all, you need to know that what types of analysis you are choosing for. So technical analysis and fundamental analysis, I have a video talking about the differences between these two types of analysis. So normally if you are a short-term type of traders, you will be using the technical analysis. For the longer term, the fundamental analysis will affect more. So when you want to choose whether technical or fundamentals, you need to choose the type of traders you need to be. So what is for the technical analysis is like the price action, or you need to use the indicators, so strategy you use strategy, you use indicator or the price action. So what is your favorite setup? My favorite setup is pending orders. I'm using pending orders. Why I like to use the pending orders? Because I want the specific price reach, then I will execute my price. So I will use the pending orders. So what are the pending orders? Buy or sell limit. So I have one video showing that what is the buy and the sell limit. This means that the price reaches your limit, then the price will trigger and you will be into the trade. Buy or sell stops. This is normally for breakout. So this is normally for rebounds, and this is the buy or sell stop is normally for breakout. So please remember the take profit and the stop loss is very important. Stop loss is very important. Normally is 1-to-1. And the take profit, it depends on your own risk reward ratio. It can be 1-to-2, 1-to-1, 1-to-3, or even 1-to-1.5, 1-to-1.4. This is your very own risk ratio. So which time frame you will choose? This is your own choosing. If you are a scalper, 5 minutes, 1 minute, 15 minutes. 30 minutes is the maximum. If you are a day trader, 1 hour, 4 hour, or even a daily time frame. If you are a swing trader, 4 hours, 1 day, or even a week, or even a month. So I'm a swing trader. I will normally be using a month, week, and a daily. I don't use only one time frame. I use 3 time frame. So what are the 3 time frame? The 3 time frame is for like the month. Is for my major direction. Month is my major direction, week and daily. Daily is my entry time frame. So I don't go under daily time frame. I normally stick to these 3 time frame. Because I'm a trend trader, I need a direction chart. So month is for me to find my direction, and entry time frame is using the daily. So you may also use like week is your direction, time chart, daily, 4 hour. You may execute your price in 4 hour chart. This is the multiple time frame analysis. In future, I will talk about it in detail. So what is your risk reward ratio? And this is your risk tolerance. You want to be 1-to-1, 1-to-1.5, 1-to-2, 1-to-3, 1-to-4, or even 1-to-5. This is based on what is your type of analysis and how you're gonna execute your price, and you need to know that there must not be any obstacles within the execute price to the take profit. So your position size. Position size is very important. This is due to your trading capital. If you have a very large trading capital, you may have execute a bigger position size. And please remember, if 1 month, how many trades you are going to execute? If 1 month you are going to do in 5 trades, this is for swing trader. So one trade you are execute this price and the risk is like 1%. So 5 trades already 5%. So please very careful with your risk management and how much your capital. And please remember it, we are earning percentage of your trading capital, not earning the trading capital times, like times 1, times 10, times 20. We are earning the percentage. Just like you are putting your money in your fixed deposit account, they will give you in return of like 2%, 5%, depends on which country you are in. Okay, just make for example 3%. Yearly, this is annual rate. So if 1 month you can earn 5% out of your own trading capital, you are very good. So have a routine for staying on track. Weekly review using the trading journal. So next video I will go into what is trading journal. Trading journal is very important to keep track of the mistake you make, and also to maintain your routine for staying on track to follow your trading system. So this is all for the trading plan. And so I will go into what is a trading plan actually, and it is an organized approach to executing a trading system that you develop based on your market analysis and outlook while factoring in the risk management and personal psychology. Developing a Forex trading plan, no matter how good your trading plan is, it won't work if you don't follow it. Just like what I mentioned in the emotional control classes, if you don't follow it, how good a trading system, how good a risk management system or money management system, it also won't work. So the one who survive year after year is the one who follow strictly on their rules and strictly on their plan. It's just like doing business while Forex trading. So that's all for today, and I'll see you in next class.